Hello. Oil, gas and electricity prices are all down this week, so let's take a look at what's been happening in some more detail. Oil prices were choppy on Monday and closed range-bound. However, by Tuesday, prices started to ease with US stocks forecasted to rise this week. Also added into the downward pressure was comments by the Russian energy minister, who suggested that discussions of further OPEC cuts were premature. Brent eased on Wednesday. The weekly EIA report showed an increase in US commercial crude of 5.7 million barrels, which was greater than expected. As a result, front-month contract lost $0.35 per barrel. The bears took charge on Thursday and the front-month contract fell nearly $1 per barrel, continuing Wednesday's downward movement and on the back of larger than expected rise in stocks. Poor economic data released also contributed to the losses. Last night, Brent closed down at $60.19 per barrel, which is down $1.38 per barrel compared to last Friday. Monday's session was bearish, but near-term contracts saw the biggest losses. November 19 fell just over 2.5 pence per therm session on session. Prices softened as supply and demand fundamentals were healthy, as well as temperatures expected to be above the seasonal norm in the coming weeks. Prices continued to slide on Tuesday. Strong LNG flows and a weaker wider fuels market were the main drivers. Contracts were mixed on Wednesday. Prompt and near-term contracts eased thanks to a healthy system, whilst curve contracts rose in line with higher carbon prices, which were up nearly 2% day on day. Despite the system opening long on Thursday, it soon moved into a short position. As a result, prompt and near-term contracts rose. Longer dated contracts took their direction from falling oil. Last night, contracts out to summer 22 all posted losses compared to last Friday. All power contracts softened on Monday with pressure coming from falling gas. As gas prices continued to soften on Tuesday, so did electricity. However, longer dated contracts found some resistance to the downward movement as carbon markets started to rise. Contracts out to summer 21 eased on Wednesday, whereas contracts beyond that date rose. Wind generation reached 4 gigawatts, which is 1.1 gig below the seasonal norm, although forecasts do suggest generation would increase from Thursday onwards. Power prices tracked the movements of their gas counterparts on Thursday, with near-term contracts rising and longer-dated contracts shedding value. Last night, all power contracts closed lower than last Friday. Winter 20 closed at 52.8 pound per megawatt hour, which is down 0.5 pound per megawatt hour compared to last Friday, which is a 1% loss. You can download the full version of this report from our website. Thanks for watching, and we'll see you next week.